Hey traders, a very warm welcome to you. So we all know what going short is. We all know that we're looking to profit from a down move in the market when we're going short. But do we know what a short squeeze is? Let's just remind ourselves how the process of borrowing stock happens, and then this will fit in nicely with what is a short squeeze. Just a little caveat here. This is only for stocks and shares. It's not appropriate for futures, not appropriate for currencies, not appropriate for anything but stocks and shares. Okay, so if we want to borrow, go short, effectively this is what we are doing. We have a person here who owns the stock. So he owns ABC stock. Okay, and this might be a pension fund, it might be a long-term investor. It's someone who's really not concerned about the ebbs and flows week to week, quarter to quarter, generally speaking. You know, they don't want to see it collapsing, obviously, but they're pretty confident. It's tucked away for long-term, got a long-term thesis, whatever. Then we've got someone like you or I who come along and say, hey, we'd like to go short this stock. We need to speak to our broker. So here's you or here's me. We're sitting here and we say, yes, we'd like to go and short this stock. But as we remember, going short means that you're selling something you don't own. So we need to take ownership of that stock first before we can sell it into the market. So we then go up towards our broker. And our broker says, we say, hey, Mr. Broker or Mrs. Broker, I'd like to go short ABC stock. Do you have any shares available? And Mr. Broker says, actually, yes, we do. He speaks to the owner here and he says, Mr. Owner of the stock, will you loan us the stock, please, to go short? And we will pay you a percentage per annum for that. Let's say we'll pay you 5% per annum to borrow that stock. He says, yeah, no problem. He gives the broker 100,000 shares of stock. And then I say to the broker, okay, I would like to short 100,000 shares of that stock. And the broker says, certainly, that will cost you 7% per annum. Great, it all works out pretty nicely now. I've got 100,000 shares. And let's say, just for ease sake, it's a dollar. $1 per share with 100,000 shares. I give my broker £100,000. And in exchange for that £100,000, I get stock. Actually, no, I don't yet, by the way. I actually borrow the stock from the broker. The broker says, yeah, you can borrow the stock. Absolutely fine. Now you need to, so when you sell that into the market, you can pay me for that stock. So I take my 100,000 shares, I go to the market, I put my 100,000 shares in the market, I get £1 each for each share, I get £100,000, I pay that back to the broker. Sometimes this happens, sometimes it doesn't, depending on the relationship you've got with the broker. But let's just use that for argument's sake. Goes back, the broker gets £100,000 and I've sold that stock in. So I've got £100,000, I'm £100,000 up, so to speak now. Broker's using that as collateral. He's not going to take the full 100,000. We have to tread a margin on that. So it's not necessarily the case. But let's assume now I have in my possession £100,000. But I'm 100,000 shares of stock down. Now, this market then goes, let's say the market goes lower. Great, I'm short, I'm going to make some money. It now goes down to $0.50 per share. I think, great, I'm going to cover my short. I come back in, I buy my 100,000 shares back. So I go to the market and I buy 100,000 shares. That cost me $50,000. So I've bought those back. Great, I've now got the 100,000 shares. It's cost me $50,000. Brilliant. That means the broker can have his shares back. Great, there's his shares and I've made the difference. So 100,000 minus my 50,000, I've made 50,000 on the trade. Minus any cost to hold this position. The broker then has made a little bit on the deal, a couple of percent. He's also made some money on the commission. He's happy. This guy's happy. Mr. Pension Fund's happy because he's made 5% because perhaps I've held that for a year. I'm happy because I've made £50,000 based on a short-term move. Simplified version of going short. I think we kind of got that, and I think I've done. Just getting my cloth. I think we've done another video on that before. But just as a reminder. Okay, so what is a short squeeze? Now, the example is I've got 100,000 shares short, so I owe Mr. Broker 100,000 shares. Fine, makes sense. Now, let's say the chart is doing this. Okay, I went short at this point here. Went down, all of a sudden now it's starting to pick back up. This was a dollar, wasn't it? I went short at, and this is 2, this is 3, this is 4, and then we use a log scale and we go straight to 10 here, right? Just as an example. So this price is now going higher and higher and higher. Okay, I am in pain. I'm now 100,000, 200,000, 300,000 pounds down on the deal. And really that's the worst case scenario for me. So consider me, many multiples of me. I'm a hedge fund trader, all short, seeing this market being pushed up. What are you going to do? You're like, listen, I've misjudged this. I expected them to fail miserably. The profit warning didn't come. Now they're picking back up. Whatever happens, you know, the company's doing better. They've got deals. They've got out of debt. Whatever. Doesn't matter. The thing is, this thing is ripping up and it's closing on 10, which has given me a massive loss. I need to cover my position. This is now in the process of a short squeeze, or the first part of the process. People are buying because they want to invest in the stock, but shorts are trapped. People like me are trapped in the stock. I need to get out of it quickly. Everyone else needs to get out of it quickly. What are we doing? We are buying to cover our shorts, causing even more fuel to the fire. The buyers who are coming in and investors, these are investors, these guys here, who believe it's a good stock. And this is short covering by me, who's completely trapped. And this is causing a complete absolute squeeze to the upside. And you see this quite often with stocks that are heavily shorted because people are stuck, they're losing an awful amount of money. And when you start to get to a certain point, especially ones that have come really off the lows, it makes no sense. You just want to try and cover it. Now, this can be amplified by the fact, if we remember, we went back and we had Mr. Pension Fund here. This is the owner of the stock. He owns ABC stock. He now sees this, and if he's shrewd, and this has happened before with Volkswagen, in fact, there's a little bit different scenario of that, but it happens with stocks on a regular basis. He's seeing this, and he says, you know what, I can put the squeeze on the short, so I've got quite a lot of stock out for short. I want it back, and I want it back by the end of the week. So he rings the broker, says, Mr. Broker, I'd like my stock back, please. The broker says, really? He says, yes, I want it back now. The broker then rings me and says, I want that stock back. He rings all the people he's loaned the stock back to, stock out to, and says, I want the stock I've loaned to you back. You need to go to the market and cover it. All of a sudden now, you have a massive supply-demand imbalance because everyone's short. They're feeling forced to cover by a stock recall, as it's called, and they're in pain. That is the ultimate short squeeze. You can get just the pain trade here without having to be recalled to stock. But if you get the recall as well, whereas people are saying, hey, listen, I'm recalling that stock back in, I need it back, whatever reason, he's got perfect justification to do that, even if he just wants to sit on it, and even if he wants to deal it or whatever, it doesn't matter. It's his stock, he can do what he wants with it. But you imagine now everyone is down heavily and they're being phoned by their broker and says, I need the stock back. What is it doing? There is no selling pressure at all on the stock because everybody is stuck short. Everybody is trying to get out. People are investing in it. And if you look at some short squeezes, go and have a check out on Google and put in famous short squeezes, you will see ridiculous moves potentially. So that is something to look out for. In the next part of the video, I'm going to show you how to scan using a free scanning tool online for potential short squeezes. A couple of criteria we look at so we can filter out them, then we eyeball the chart, and then we see where we could potentially have a short squeeze trade. Because obviously, you probably imagine this now, guys, is the clear trade for us as traders, if we're not involved, i.e. we're not stuck short on this, for you and I just looking at this from a neutral perspective, if we see this, if we see a lot of people stuck short, if we see this aggressive move, we want to be buying very aggressively on pullbacks with tight stops, right? Because if this suddenly mammothly shoots to the upside, we want to be long. That's what we're trying to look for. So part 2, we're going to run through how we scan for those, how we potentially look out for those short squeeze trades. Anyway, guys, that's it. That's a short squeeze. If you like this video, give it a thumbs up. Don't forget to subscribe if you haven't already. Comments below. Love to see what you've got to say about the good old short squeeze. Take care. Bye.